Alright, ladies and gentlemen, welcome back to the Simple Markets channel. My name is JB, and today, if you saw the title of the video, we are going to be going over a more aggressive versus a conservative approach using the trading strategy that we use here at Simple Markets. I'm going to talk a little bit about the differences between the two. We're going to look at some trade examples that show the differences, and then we're also going to talk about the data. Now, as most of you know, this strategy here on my screen can be downloaded below in the description. We have a ridiculous amount of members funded using the strategy that we use, as well as myself and the other coaches that have been trading it for a long time now. For those of you that are unaware, we do trade the 4-hour time frame only. This can be adjusted accordingly for those of you that prefer the lower time frames, but I highly recommend the 4-hour. I think it is one of the most passive ways you can trade the charts. You can set and forget your orders. It drastically limits that psychology necessary, and overall, I think it is far more manageable. We do have a great amount of pairs here, but we utilize all of them with the 4-hour time frame so we can get an adequate amount of setups. But we will skip over that section here and mainly head to the entry checklist because there's something I want to make very apparent here. Now, starting with an entry checklist, the first thing to understand is the more complicated that your entry checklist is, it's going to limit the overall number of trades that you may have. This is especially apparent in the smart money space where some people have these extremely complex entry checklists, but there's a few issues that come with that. Now, number one, if you're drastically limiting the amount of trades that you have, keeping that strategy sustainable psychologically and also based on the time and lifestyle that you live is going to prove to be extremely difficult in the long run. Now, what I mean by this is if you have, for example, a backtesting session that shows you on the pair Euro USD, you get about 20 trades in the year, and that nets you an amazing return on that one pair. You gotta understand that within the entire 365 days of the year, things come up, you may go away on a trip, you may not have access to your computer and your trading terminal, and if you only have 20 trades in a year, missing 1 to 3 of those trades, especially if they're winning positions, can be detrimental to your edge. That's why a strategy that is going to deliver more trades per pair, but maybe a looser and less strict entry model is going to be better in the long run. As you guys know, I've taken plenty trips during the summer and this year in total, and I'm still able to achieve profitability because of the reps that I take at the charts. And in fact, with the 4-hour strategy in this many pairs, our students actually get more trades than the majority of people on the smart money space trading those lower time frames. Now, step 1 is the optional higher time frame bias. This one is considered optional because I think it limits that mechanical nature of the trading plan if it's not. I simply look at a chart and look if it's bearish or bullish, and that is good enough for me. There's many people in our community who don't even use a higher time frame bias at all, and they are still profitable with prop firms. But the most important key I want to dial in on here is number 2, and this is the sweep on liquidity. Now, as you guys know, myself personally, I don't need a crazy sweep on liquidity for every single trade. There's some students, once again, in our community who don't even use it at all. And then there's some who prefer to use it on every single position, and they tend to lower their trades, but they increase their win rate by doing so. And a very common question I get from some of my YouTube videos in my DMs is, okay, JB, so you mentioned more aggressive traders can take weaker sweeps, but they'll get more trades in a lower win rate. Conservative traders can focus on the highest quality sweeps for less trades, but a higher win rate. Why would someone do this? Can you explain this a little bit more? A very common question I get from subscribers, and you guys know I like to try to cater to what you guys are asking me. So I've decided to go ahead and pull up the equity curve simulator here with FTMO. Honestly, I don't even use this firm or trade with them. I trade personal capital, but I love this tool. I've used it for years and years now. And so what we are going to do today is take $100,000 in simulated capital. We're going to put a win rate of about 39% and a fixed risk to reward ratio of 3RR. Now, 39% is just derived from my current actual win rate on my live trading journal. And I will admit this is typically higher than most of my backtested data. But nonetheless, we are going to use that value anyways. And if we scroll down here, I'm at about 140 trades and we are in the middle of October. Based on an estimate, let's say I complete this year with about 170 trades. We're going to head back here to the simulator and put in the value 170. And for example purposes, we'll keep that risk at 1%, and I'll explain why in a little bit. Now, myself, I would be considered more of a conservative trader to my community. I do take less trades. I do go on trips fairly often, which can skew your data as well. But, you know, gotta live a little, gotta enjoy life. So we will take 170 trades here roughly at a 39% win rate, and we will run this simulation. And as you can see here, a nice smooth, consistent, and clean equity curve here, and we finish with about $230,000 in max equity. You can see the drawdown values here, the average drawdown, the max drawdown. As most of you following me closely, you know that my max drawdown for 2025 was about 7 trades, which basically aligns directly with that. My average drawdown can easily be about 2 to 3 trades in a row, which perfectly lines up with that. And I don't quite think I've gotten 4 winners consecutively this year, but I think I've gotten 3. So this simulation is pretty accurate for someone who trades with my style and my results. Now, the key to understand here is number 1, my win rate is very, very high, but I do take a lot less trades. I'm more conservative compared to a lot of traders in my community. Now, if we go back to our document here with the strategy that we do have some newly embedded images in here just to show some example data. And this is a bit more aggressive of a style. This is about 2,400 trades in the course of about 5 years total, and you can see the results below. Keep in mind, of course, this last year is not complete in 2020, but nonetheless, that is roughly 480 trades per year if I quickly did that math right in my head. And this would be considered a bit more of an aggressive style, but as you can see, that win rate is a little bit lower at 32.6%. Our community as a whole has a win rate of about 34%, so this is just slightly below that due to that increased repetitions. Now, this trader specifically probably does not use liquidity sweeps, and they were very lenient with their entry model. And the reason they do this is to be a lot more mechanical and consistent, and taking more reps will net you significantly more returns in the year, as can be seen by this metric below. You guys know I'm hovering at about 90% returns for the year, but I use 2% risk. This trader here was able to get with 1% risk just about the same amount that I was with 2%, simply by increasing their repetitions, understanding that win rate does not mean everything. And we're going to head back to the equity simulator now to show you the data. Now, what I did was basically take the strategy data that we saw and plug it in here for the more aggressive approach, about a 33% win rate, 3 fixed risk to reward, and 480 iterations total. And we are going to go ahead and run that simulation. Now, if we scroll down, we can see the profit is significantly higher than the original example. And you can see here that with more repetitions, it's interesting because the max consecutive winners actually increased. On top of that, you can see that the maximum drawdown for this entire year with about 480 trades was closer to that 10% value. But nonetheless, those returns and the profit are significantly higher, almost tripling the account in 1 year, which is absolutely insane. And this is just kind of the difference I want to show you between conservative and aggressive trading. And I think the most important takeaway of this video is you need to find your own style, take the strategy, practice both methods and backtesting, see what you do better with, see what you prefer. And this is how real trading is meant to be. I'm sorry, but you cannot pick up this trading strategy that we give for free and expect to knock it out of the park home run right on a live market without any testing or practice. It's part of the reason we do give it for free is we know there's people out there who are going to put in the work and get the success. I can't even tell you the amount of subscribers we've had that actually get funded using the free strategy. They never pay me a dime and they get to DM me after and thank me. It's a great feeling, but more importantly, knowing that there is people out there putting in that work that they need to. Hopefully this video gives some clarity on that topic. Now, last but not least, I do want to show some trade examples just so you guys can get an idea of the different approaches. Now, back to the community here. This trade is just an example of someone who I know trades fairly aggressive. His name is Sebin, and the orange name in our community means that he is funded. Now, as you can see, this trade is a bit more aggressive than what I take or show in my YouTube channel. It's kind of something that he's more comfortable with due to his backtesting. Nonetheless, he considers this a sweep on liquidity here when we have a few candlesticks in a wick above it. He follows the break of structure, and the fair value gap is in the range. So yes, all the rules are technically met in a scenario like this. He actually did not get the tap on this position on FTMO due to spread, but nonetheless, just for example purposes, this trade does follow the rules. It's a bit more aggressive than what I trade, but this is just something I want to show you guys so you can get a visual example of it, compared to someone like Joe, who also with an orange name is funded using a more conservative approach here. He does have that win rate a little bit higher, similar to mine at about 40%, but he has a lot less trades in the last 3 months or so, where he only has about 43 trades in the past 3 months. And you can see the kind of variance here. He has about 15 RR in 3 months with a 40% win rate, which is absolutely fantastic. And 2 different traders here, Joe and Sebin, showing you the variance in the strategy, but both being funded at the same time and both getting many payouts with prop firms. This is kind of the key that I want to get across in this video. It's about your style and your preference based on your backtesting and practice. There is no right or wrong answer here. Now, if we just pop open my journal, we'll pop open a winning trade here, wait for it to load, and you could see what I mean by a little bit more conservative. Despite this trade having a sweep, a break, a fair value gap, and we just simply throw the fib on there and take the trade, it is a little bit of a larger range or a bigger range than something like Sebin took in that example image here. This kind of focus being put on larger or smaller ranges is definitely what can affect the amount of repetitions a trader takes, but of course it's up to your own discretion and practice to figure out what you prefer. I myself only hop on the charts about 1 time per day for about 10 minutes, these trades tend to be seen a lot easier. Compared to someone taking those very small ranges, they may have to be on the charts a little bit more so they can see those positions when they do present themselves based on time, as well as managing those trades a little bit more closely. I hope you guys gained some value from this video. I hope that insight helped clear things up. If you, of course, have any questions that come up after this video, you can reach out to me anytime on Discord. I answer every single question subscribers send me. You don't have to pay me. You don't have to act like friends with me. Just shoot me a question. I'll answer it, and you can ignore me forever if you want. I just like helping out. If you guys enjoyed the video, drop a like down below. It helps me know what content to kind of make more of. And thank you all for watching once again. I will see you guys in next week's video. Thank you all for watching. I hope you enjoyed today's content, and I will see you all in next Monday's video.